we're joined by Mayuresh Joshi from MarketSmith India. He joins us on the phone line, and we're going to be in conversation with him for the next few minutes to pick up on what his thoughts on the markets are currently. Mr. Joshi, thank you so much for taking the time out.
Good afternoon, Pallavi. Pleasure is all mine.
Well, a very good afternoon. So, looking at the volatility that we are seeing on the markets on the back of the global jitters, I do want to ask you, what is it looking like at this point, and what are the cues that you're going to be looking forward to determine what the markets will be like going forward?
So I think it's a combination of a couple of factors that are probably evolving. One, on the geopolitics front, what happens on the Iran-Israel conflict is something that the markets are a little bit perturbed about. And the new rules and changes which are expected to happen on the futures and options side starting November, I think there is some amount of jitteriness there. However, on the global front, obviously I think the Chinese rate cut and the stimulus measures have seen a positive impact on the Chinese market. Japan's new prime minister, where the initial hope was that he is a hawk, his statements have been absolutely contradictory. He ruled out any imminent rate hike. So the yen has fallen, the Japanese stocks are rallying, US data has come out stronger. So there is, again, a hope in terms of what the RBI meeting might be, that they might get their stance to neutral and probably a rate cut at the end of the year. Obviously, local elections in the Indian context and the US presidential elections in November, December will keep the global markets on their toes along with geopolitics. So I think volatility might very much continue for global markets, and that volatility might actually seep in to Indian markets as well. But to a large extent, India still stands out, and therefore, at least at this juncture, you're not looking at the structural downside, at least as the Indian market.
Okay, so Mr. Joshi, can we continue to see some volatility continue in the near term, at least, just given the uncertainty that we now have on the geopolitical front?
Oh yes, I think that's what my comments were, that based on all these factors put together, global markets might be very, very volatile, and that same reflection might probably happen on the Indian markets.
Even on the Indian markets, we've been talking about stretched valuations for a while now, but given that domestic headwinds have been relatively strong, do you think, given the slightly more complex global and especially geopolitical scenario at this point, that's going to be the cue to possibly some correction taking place in the markets in the nearer term?
Might be a possibility, but one fact that remains, Pallavi, is that over the last couple of years, earnings have also grown at a good pace as far as Indian markets are concerned. And therefore, I think markets have been mirroring the moves in terms of prices, though exaggerated in the broader universe. But the general consensus is that earnings have grown at a decent pace along with the market. Now, this year and for the past couple of quarters, earnings have been a little bit soft based on the higher base that we've seen for the last couple of years. But with better monsoons coming through, the rural side of things looks a little bit bright as far as the second half is concerned. If discretionary spending patterns are to be believed, and if the expectation of a US soft landing is assumed along with the recovery in Europe, IT services might actually start stabilizing as well. Albeit for the Middle Eastern crisis, conflict probably escalates. A large part of that might get reflected in terms of how crude behaves, how the expectations in terms of logistic costs on the Red Sea crisis might play out to be. And therefore, I think this is one fact which might actually have a little bit of a pull down as far as some export-oriented earnings might be concerned for a few sectors. Leaving that aside, I think domestic cyclicals might continue doing well. However, valuations and price action are a tad bit on the higher side. So earnings might show a tad bit of a recovery in the second half, but the general consensus is over the next couple of years, we'll have a decent 12 to 14% earnings growth, which probably then pegs that the premium valuations that India is getting might probably get justified, along with the liquidity that remains extremely strong, both domestic and global.
Okay, all right. So, Mr. Joshi, given that it remains a volatile market, in terms of stock-specific picks, any sectors that are looking but relatively more resilient to you at this juncture?
So as I said, domestic cyclicals probably look a tad bit better at this point of time. So select EPC players, select capital goods players, select cement players should have respite in earnings. As the market gets a little bit more defensive, I think the perfect hedge can come through selective FMCG pharma stocks as well. So I think domestic cyclicals and a little bit of these defensive sectors can have earnings stability as far as Indian markets.
All right, Mr. Joshi, thank you so very much for taking time out for us. That was indeed very insightful for our viewers given the volatility we're seeing in the markets today.